Great, guys. Thanks for tuning in. This video that we're doing today is specifically for my 1099 folks, my self-employed folks. This video is talking to you guys today. We've got Tayler Hendricks with Intercap Lending. And we're going to go in and talk about the qualifying differences of what that process looks like if you are self-employed. And if you're looking to purchase in the near future, a couple things that you should be aware of as you go throughout that process. So let's begin and jump right into it. Tayler, let's talk about that real quick. What are the requirements for someone who's looking to purchase a property if they're self-employed?
If they're self-employed, they're always going to require 2 years of tax returns, no matter what. And a lot of people think that 2 years of tax returns means you need to be on the job for 2 years or, self-employed for a full 2 years. It's really, you have to make sure that you have 2 years of tax returns. I don't know how in depth we want to go, but that can be through a Schedule C, that can be through an S Corp. However it's set up, as long as we have those 2 years, we'll take the 2-year average of those.
And 2-year average, let's talk about what that is. Is that based off of, I don't know, say I make $100,000 year one and $200,000 year two.
Yep.
Right. So theoretically it's 150 average, right?
Yep, exactly.
But I'm doing my numbers off of the gross. So on a lender side, what income can you use to qualify? Are you looking at the gross income that they have there for my self-employed folks? Or what number is it that we're looking at for qualifying?
Yeah, that's a good question. So we don't go off the gross. I wish we could because that'd make it a heck of a lot easier sometimes. But we do go, and we don't even go off of the adjusted gross. We actually, as a lender, we have a totally separate way of going about that. We have a different formula and calculation. I can tell you, for example, we can add back, if on an S Corp, we can add back depreciation. That's a huge one. So if somebody claims a lot of depreciation, you get the write-off, and we can add that back for qualifying. But the majority of the items that you do write off, we do have to back off of your income. I know on a Schedule C, if you write off business miles we can add back. So you can, same thing, get that write-off and be able to use that for qualifying. But yeah, so we definitely take a look at the write-offs and kind of go off of a lower number as opposed to the gross.
I mean, honestly, we could almost end the video right there.
Right.
It is important, as if you haven't done your taxes yet and if you're going through that, is making sure that your income is actually going to be high enough to qualify, right?
Yep.
Some accountants will go super aggressive and then write off maybe too much. Frankly, I hope I'm saying this and disclosing it in the right way. But yeah, you want to actually show that you're making some money, right? The lender, as they're looking at your income, if you're telling the government, hey, I'm only making $10,000 a year, then the lender's going to see that more than likely and say, well, he's telling the government he's only making $10,000 a year. And even if he's telling me he's making $300,000, I have to look at the documents that they're sending to the government and say, that's what we can use to qualify. So again, this is just a general thing, is like, I would say don't be uber aggressive on your taxes. You may have to pay a little bit more, but put in your real numbers and make sure it's looking right and that you don't cut yourself short and you don't make it look like you're not paying anything and you're not making any money, because it'll kill what you can do to qualify. So anyways, that I wanted to put that little tidbit in there just to know on the lender's perspective, they want to make sure that you're actually making income. For my 1099 folks, is there anything else that you feel like they need to know? And honestly, I feel like it's actually a pretty easy topic. Just a lot of people don't know the first things that we've talked about here. But
yeah. I would just say if any of you have questions about your exact taxes or anything, I do it all the time where a lot of people still haven't filed their 19s, but I can take a look at your 18s and your 19s or just get a rough idea. That way, basically, I'm able to look at your 19s before you file, and I can let you know, hey, with those numbers, here's what you can qualify for. That way you know up front, and potentially even so before you file your taxes, hey, I can qualify for this much. It's always a good thing. So if anybody would like me to do that, I do that probably 2 or 3 times a day. I'll just be able to go through and take a look at them pre-filing and let you know. And
something else that I want to talk about for my 1099 folks is sometimes, you've recently started your business, it's going well, but you want to purchase real estate because you feel like it's a good investment. I agree with that school of thought. What are some ways that they say, hey, I've only got a year. I mean, is there any ways that they can work around that? And we're going to use the term work around that loosely. recommend folks do things that are illegal. But anyway, whether it's a cosigner, what are some options that they have there?
Yeah, the biggest one is a cosigner because they are very strict on 2 years of self-employed or 1099 income. So whenever we run into that situation, I work with a lot of summer sales guys, and it's a lot of people, it's their first year, or maybe it's their second year and they're just getting their back ends, but they don't have their taxes done yet and they need to buy now. Same thing, it's always what we recommend as a cosigner. That's the easiest way. Parents or anybody that are willing to help, we can do that. And the normal play on it is, for example, I have somebody that was in that exact situation. He has his 2019 taxes done. He just barely went out and sold for 2020, wanted to qualify, and I told him, look, we need your 2020 taxes too. He wants to buy right now, so he's going to go ahead and buy with the cosigner, and then in 6 months or a year, right around there, as soon as he has his 2020 taxes filed, we'll go ahead and refinance, and we'll back off that cosigner, so it's just him. But we do that a lot. That way you can at least get into the home, and that cosigner is not on the hook for very long, like a year max, and we can do it that way.
So let's talk a little bit, real briefly, about this cosigner. Does it affect anyone negatively if they have a cosigner? Say, my mom or my brother, whomever co-signed with me. Yeah. I mean, what are some of the negative repercussions if I have a cosigner? So
there are some. So that's where you got to be careful. With a cosigner, they are on the hook for that monthly payment. So, for example, if your monthly payment's $1,000, if they're trying to qualify for something else, at least in the mortgage world, I do have to hit them for that $1,000 monthly payment. There is a rule, though, on a lot of different loans where if that cosigner is not making the payments, if your guy that's self-employed is making the payments and your cosigner's not, and you make 12 consecutive payments, and we can get bank statements or something showing, hey, look, I'm making the payments, my cosigner is not, I can back that debt off. Worst case, they're going to be on the hook for a year if we can get that documentation to show that. But that's if we don't refinance or anything like that, if that makes sense.
Yeah, no, that's great. Honestly, I think that covers most everything that someone who's self-employed really should know is knowing, hey, what income do I need to be showing there? And then if I am self-employed and I want to get into something quickly, what are my options? I do think that co-signing is the best option. Something that was a misconception that some folks still teach, and I'm not sure if this ever was a thing or not. In all my time doing real estate, it hasn't been a thing. But some folks were like, oh yeah, no, they need your 2-year history, but it can just be 1 year split in two. That's not true. Correct?
Yep.
they still
I wish it wasn't.
They still need to see that 2-year history and to get that done there. That's just kind of a non-negotiable there. So it's a little misconception there. I hope that's cleared up for everyone. But anyway, I hope this video has been helpful for you, my self-employed folks. Is there anything, Taylor, that you'd like to share with our self-employed folks before we finish out?
Honestly, I think we covered it. I think we covered it really well. Just 2-year history, and if not, you got a cosigner or other things. And honestly, everybody's situation is different. So if you're not fitting exactly what we're talking about, or even if you are, just give me a call, because we can tend to get creative and think of other ideas or ways. If you don't have a cosigner, we can go over other options of what we might be able to do for you. I think it's always best to give me a call, because it never hurts. 5 or 10 minutes to get an exact idea on your situation never hurts.
Awesome. Great. Well, thank you so much, Taylor, for coming in. Thank you guys for watching this video. I hope it was helpful. And I wish you guys the best of luck in your real estate process. Thanks again.